SEBI thinks that we as investors pay a lot of cost to the mutual fund industry. But we finally have some good news because SEBI has proposed new rules to reduce the cost that mutual fund investors pay for every transaction. Now, what does this mean for brokerage houses and investors? We'll look into it. And in the second story, we'll cover about China's building its e-currency. Will this affect the dollar? Will dollar finally stop being a king currency? And will all the countries accept this? There are a lot of questions. So let's dig deeper. Hi, this is CA Suhani Kataria and let's begin. SEBI has proposed new rules to reduce the cost that mutual fund investors pay and to make every charge easy to understand. The regulator wants to cut the brokerage any transaction fees that mutual funds pays when they buy or sell securities. In simple terms, the cap on brokerage for cash equity trades would come down from 0.12% to 0.02%, and the cap for derivative trades would come down from 0.05% to 0.01%. SEBI is doing this because it believes some of the brokerage includes hidden research or advisory services, while investors were already paying that for research through the fund management fee inside the expense ratio. Lower caps should stop this double charging. Now, SEBI also wants the total expense ratio or the TER to show only the true operating cost of running a scheme. All maturity taxes like STT, GST and stamp duty would sit outside the TER and would be shown separately so investors can clearly see what is the fund's fee and what is the tax. The small extra charge of 5 basis points that AMCs could add earlier would be removed. To reduce the impact on a very small scheme, SEBI may slightly increase the base expense ratio limit for the smallest size slabs. Overall, this change will make the TER cleaner and easier to compare across funds. Now, SEBI plans to allow a performance-linked expense ratio on an optional basis. This means an AMC can choose to charge a lower fee in the weak performance periods and a higher fee in strong performance periods within defined rules. The idea is to align the fund house's earnings with investors' outcomes so that investors feel that they are paying for results rather than a fixed fee regardless of a performance. SEBI also wants clearer disclosures. AMCs would present a line-by-line breakup that shows the base TER, brokerage and exchanges fees, regulatory fees, and each statutory levy separately. This will help investors understand exactly where the money goes. Now, for the investors, these proposals mean that the cost should come down and become more transparent. Investors would clearly see what is TER and what is the tax. And in the case of performance-linked model, they could pay a little less in weak years and a little more in the strong years with clear rules and disclosures. For AMCs, there might be a short-term pressure on profit margins, especially for small on new fund houses and for higher turnover strategies, while larger AMCs with scale may adjust more easily. For distributors and brokers, commissions and brokerage revenues could reduce as AMCs in the industry adjust to the lower cost structure. SEBI is doing this to make the mutual fund pricing clean, fair, and comparable. The regulator wants to end the double charging for research, unbundle levy cost, and prevent TERs from moving up or down when tax rates change by placing tax outside the TER. A simple way to think about it is that today a fund might show a TER that includes a mix of cost and some taxes inside other expenses. While under the proposal, the TER would likely be a bit lower and every other charge would be displayed separately, with brokerage capped at very low levels and taxes clearly shown outside the tax expense ratio. SEBI has released this proposal for public comments, and the comment window is open until November 17, 2025. Final rules and timelines will be shared after SEBI reviews the feedback and makes any changes. And now, for the second story, China has built a digital version of its currency called as the eCNY, which is the digital RMB. It is testing fast cross-border payments with a few partners on platform called mBridge. These tests show that payments can settle in a few seconds and can cost less than the old bank routes. This is a big improvement over the usual system that takes place for several days. Right now, these cross-border digital RMB payments are still pilots. They are not fully live for all countries or all banks. Some social media posts claim that almost half of the world trade already uses the digital RMB. Those claims are not backed by official sources and should not be treated as facts. Secondly, China's use of the regular RMB for trade is growing even without the digital RMB. More trade with Asian and some energy deals are being priced and paid in RMB through normal banking channels and China's CIPS system. This helps China slowly increase the international use of its currency. It does not mean that the US dollar is suddenly replaced. But the idea of de-dollarization needs to be understood carefully. The shift away from the dollar, if it continues, will likely be slow and selective rather than a sudden and universal change. It will begin where China is a major buyer or supplier, such as in energy, commodities, and supply chains closely tied to the Chinese trade. More deals may be priced and settled in RMB, especially with partners in Southeast Asia and the Gulf. However, the dollar still dominates global foreign exchange markets, international reserves, and much of the world's financial plumbing and those network effects that take place for a long time to change. Now, there are clear examples that help explain the current stage of change. Some LNG and other commodities trade have been invoiced and settled in RMB, which shows growing comfort with using the Chinese currency for trade. More foreign banks are connecting to CIPS to move RMB more easily, which extends the reach of RMB through existing banking rails. At the same time, these examples do not prove that the digital RMB itself is already used at a large scale worldwide. Now, what should we watch for next? We should watch for an official launch date and clear rulebook for mBridge. We should watch which banks are allowed, what are the daily volumes they handle, and how compliance and anti-money laundering checks work. We should watch whether the big commodity trades like oil and gas actually settle in digital RMB and not just regular RMB. We should also watch how many foreign banks join CIPS and how many of RMB trade goes through it. In short, the technology is real and promising. The pilot shows speed and cost benefits. But the global reset is not here yet. Change is happening, but it is happening step by step like baby steps. Now let's get to the news flash section. As we can see that this is a season for the earnings call. So there are a lot of earnings calls that we can see. We'll just look at one of them. As we can see that Capital Small Finance reports 5% growth in Q2 net profit to 349 million rupees. Mahanagar Gas reports 41% decline in Q2 net profit to 1.9 billion rupees. Then we can see that Apollo Pipes reports decline in Q2 financial performance. PV Fintech reports quarterly growth with net profit rising to 1.3 billion rupees. Then we can see that Aztec Life Sciences reports reduced net loss despite revenue decline in Q2. So for more such earning calls, you can actually follow Newsflash section. Now, let's go to the Insights tab and let's look at the heat map for today and let's look at the top gainers and losers. As we can see that today we were up by 170 points in Nifty today. So we'll look at the top gainers, where we can see that Adani Ports in SEZ is up by 2.6%, NTPC is up by 2.46%, JSW Steel is up by 2%, Adani Enterprises is up by 1.72%, Power Grid Corporation of India is up by 2.46%, HCL Tech is up by 2.31%, Sun Pharma is up by 1.71%, Tata Steel is up by 1.86%, SBI Life Insurance is up by 1.7%, Shriram Finance is up by 2%. So, these were the top gainers for today. If we talk about top losers, Dr. Reddy's Laboratory is down by 3% today. Coal India is down by 2.5% today. Bharat Electronics is down by 1.54% today. Maruti Suzuki is down by 1.06%. Mahindra & Mahindra is down by 1.24%. We can see that the auto industry is down today. Now let's go ahead and look at the FIDI data for today. As of 28th October 2025, FI bought in cash of 10,339 crores, whereas DI bought in cash of 1,081 crores. If you look at today's top deliveries, the 5 top deliveries are Ultratech Cement, Power Grid Corporation of India, Sun Pharma, Max Healthcare and NTPC, which range from 78% to 63%. Now, let's go on the Dhan homepage and we can find a key indices and commodity section where as of 30th October 2025, we have Sensex and BSE BankX monthly expiry. Now, Let's go on Dhan charts and analyze Nifty 50 for today. As we can see that a good big green candle has been formed. Yesterday we saw a doji candle formed, which was a sign of indecisiveness, but we can see that the indecisiveness led to buyers being strong today. So as we can see, Nifty opened around 25,982, made a high of 26,097, made a low of 25,960 and closed around 26,053. It is well above its 50 EMA and 20 EMA, and the RSI is overbought at 72. Now, if we look on a weekly basis, we can see that a nice cup has been formed since the last time Nifty reached its all-time high, which was 26,277. And we think that we might be going toward that level. Let's wait and watch what happens over the next few months. On a weekly basis also, it is above its 20 EMA and 50 EMA, and the RSI is at 63. If we talk about Sensex is also up by 368 points today. We can also see a cup forming on Sensex on a weekly basis. But if we look at it at the daily basis, we can again see a strong candle forming today for Sensex, where Sensex opened around 84,663, made a high of 85,105, made a low of 84,638, and closed around 84,997, almost around 85,000, which is a very good deal, which is a very big numbers that we are seeing here. If we talk about today's top gainers and losers in the indices area, we can see only one top loser today, which is Nifty Auto, as we saw in the heat map as well, which is down by 0.73%. Rest all the indices have closed in green. The top being Nifty Commodity, which is up by 1.73%, followed by Next 50, which is up by 1.42%, and Nifty FMCG is up by 0.9%. That's it for today. I'll see you tomorrow. So what do you think? Will China actually replace the dollar? Tell us in the comments below. Till then, like, share and subscribe, and stay curious and stay updated.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.